The Aris. So this is in Houston. It's a high-rise in downtown Houston, and the developer really bungled the launch of the building, and they tipped the building over into foreclosure. So our sponsor is buying this at just under 50% of the replacement value. So our purchase price is 78 million bucks for this 2018 new luxury building. It would cost 155 million to replace it today. So we think it's a 4-year hold. We've got just a couple things we need to rationalize on the expenses. The the rents that are in place right now have been completely mismanaged. They're well below the market comps. All we have to do is get a professional group of people, and they're managing the building. Who knows what the hell they're doing? So this fund sponsor runs a $1.8 billion portfolio with 5,300 apartment units. They've done 4 other projects just like this one. Those rates of returns varied between 25 and 36%. I put this at 20 to be conservative, but honestly, I'm expecting it kind of be in the mid-20s. And on those similar projects, in the first 12 months after the takeover, the sponsor has, on average, been able to increase the income by 6.5% and cut the expenses that were controllable by 13%, which resulted in almost a 25% lift in the operating income just after a year. So we're not doing anything new here. It's just rinse and repeat with the strategy that we've already got. This one's downtown. It's really close to the Houston light rail system, and it's a gorgeous asset. Just competent management. I can't believe that we got this opportunity, really.